Yes.
Okay. Okay, so I'll just start with the basic and then probably I'll explain in the system. So how the stats configuration will work. Okay. So
Okay.
basically, we are looking at Middle East as an example, and we are trying to understand how the stats will work. Okay. So now let's take a scenario wherein this purchase happens inside, let's take example as in Saudi Arabia. Okay. So now this entire process of purchase or the sales transaction happens in Saudi Arabia. So now
Okay.
here, yeah.
Yeah, tell me.
Okay, yeah. So here in this case, the standard VAT 5% will apply. Okay. So now, whereas there are few areas wherein the SIS enabled areas, so wherein the tax should not be calculated, meaning that system will have to have this option of generating the tax which is zero, but then this will specify saying that this is specific taxation that has been generated, which would be an exception case. Okay. So
Okay.
another condition is that, so if this is within GCC, so there will be 1%, let's say 2%. So if it is outside GCC, let's say customer is importing from India. So now in this case, the rate would be probably more than 5%. Okay. So this is the condition. So now in terms of tax configuration and Oracle, so we have something called tax rule, which we will write. Okay, so the entire process of generating the taxes happens in Oracle based on this condition. So now when this condition matches, so basically the rule is very simple. So we'll give condition and we will say if this condition matches, then I wanted to generate this tax rate. Okay. So that's a simple one that we'll do. But in terms of writing the condition, so there are a lot of things that we can do. So first thing is that I can write based on the geography, because in this scenario, if you see, so if it is within GCC, I wanted to have one tax rate, and if it is outside GCC, I wanted to have one tax rate. Okay. So this is first thing. And secondly, in terms of calculating the tax, so we have something called tax point. Okay. So tax point is nothing but when I exactly wanted to generate the stats. So because there are certain scenarios wherein I will need to generate the stats only when this invoice is created. So until then I will not have taxes that is generated. Okay. So for this what we will do is that, so we have an option called product non-inventory linked. Okay. So there are two things. So one is inventory linked and the other one is non-inventory linked. So I'll show all these things in the system. So once we get into the system. Okay. So just
Okay.
to understand, I'm just explaining these concepts. Anyway,
Sure, no
this is
problem.
like a,
Yeah.
yeah.
And also, like, I will just to give a background, like what I know. So basically,
Okay.
like, I understand like this different scenarios, like standard rate 5%, zero rate exempt intra GCC, foreign
Right.
export. So I understand that. I'm just
Okay.
informing you. So
Okay.
and tax point, what you're saying is like when to generate this, I mean, when to consider this tax rate, right? That's what's
Correct.
tax point. Like
Correct.
type of invoicing, or
Correct.
like again, invoicing also you'll have like inventory linked invoicing, or it's like
Correct.
service, it is not inventory. Is that what you're trying to explain?
Yeah. Yeah. So meaning, so what I was trying to say is that, so when we say that inventory linked and non-inventory linked, which means this is based on the item. So if it is inventory linked item, so we have something called item category. So if this is the category, then we will say that generate this tax rate. And the other scenario is that I will not have this item category, meaning based on the item, I will not tax it. So I will tax based on the value or the tax classification code that is selected at the invoice. So that's the difference between both the options.
Okay.
Okay.
Right.
Yeah.
And like
So,
also one more thing, sorry, one more thing, like I just actually went to the Oracle website,
okay.
like they had some template for this GCC. So I just downloaded that Excel. So I also
Okay.
checked it. So I'm saying,
Okay.
but I'm saying that is just a template, but I'm saying like, please explain like based on GCC. Okay.
Okay.
Thank you.
Yeah, yeah, sure. Yeah, so that's about the one option, that is product-based tax generation, and the other option that we have is that something called tax classification. Okay, so how do we differentiate is that? So we have something called configuration owner tax options. So this photo defines how we wanted to generate. Okay. So if I'm going to use the tax classification code, so tax classification code will be applicable for countries like UK. So wherein we do not have the complex rules that needs to be written. Unlike India and US, so we have a lot of rules that needs to be written based on the HSN codes or whatever it is. Okay. So, but here we do not have such complication, then we can go for the tax classification code. Okay. So if not, we will have to basically write a rule saying product category. So this is one option. And the second option is item category. Okay. So based on this, we can write rule. Okay. So based on this, system is going to generate the taxes. Okay. So now before going into the tax rules and all those components, so we will have to understand what is tax regime, taxes, and then the tax rates, and the recovery rates, all those things. Okay.
Okay.
So firstly, regime is nothing but for a particular region. So how I wanted to generate the tax is what we are referring to the tax regime. So meaning, let's say I am implementing for, let's say Dubai. We are implementing for Dubai and India. So now I cannot have one regime for both the regions because the entire tax structure changes. So here in India we have IGST, CGST and SGST, but whereas there we have something called VAT. So now, since it changes, I will have to create different tax regimes. Okay, so this will have control in terms of how we wanted to generate the taxes, because under this regime we will have to create the taxes and then we'll have to create the tax rates. Okay, so in case of India, so we will create three taxes: CGST, SGST, and IGST. But whereas in case of Dubai, we will create the standard, exempted, and all those scenarios. Okay. So now, when it comes to the tax rate, so of course we'll have the zero rate, and then we'll have the 5%. All those things will define as part of Dubai implementation. So in case of India, so we'll define 5%, 12%, 18, and then the 28%. Okay. So now, what are the options that we have in terms of creating these options? Okay, so for this, the module that I will use is that tax manager. Okay, so if I go to tax manager, so I have the tax configurations. Okay, so these are basic configurations that we will have to do. So apart from that, in terms of writing the rules, I have option to write based on the product, sorry, the party or the transaction level attributes also, so which we'll talk about in few minutes. So firstly, tax regime. Okay, so if I just double click this option, it is going to open a web page.
Okay. And this tax manager is under what option from the browser? I did not
Yeah, so
recollect.
here, so once, okay, maybe I'll just show from here. Okay, so once we log in, so we will have a plain screen wherein we can select this. Okay, so we'll have something like this. So these are the modules that we will be having. Okay, since this is Vision instance, we are having all the modules that is configured. If not, we will have only the licensed modules that is implemented here. Okay, so now to come
Sorry,
to
I
the
mean,
screen,
this tax is
yeah,
license separate.
tax license is separate. So for
This
each module, so
e-business
we'll have
tax is separate.
yeah,
E-business tax is separate license.
yeah, yeah, correct.
Okay.
EB, I mean EB tax is what I'm referring to, the tax manager. So this
Okay.
will have separate license.
Okay. So e-business tax, if you want to configure and use the tax rate, it's a separate license.
Yeah, correct.
Okay. Thank you.
Yeah.
Please go ahead.
Yeah, so now if you want to probably take this particular module, you can say tax, you will get this tax manager. vision operation. Okay. So this is the module. Okay. So I have just clicked this one. So once you click this option, so you'll have this option. So you'll have home, product, all those same options that we saw in the form. Okay. So this we call it as in Java form. Okay. So once you click this option, so you will be taken to this web option. So wherein you'll have this stats configuration, product, parties, transaction, default and controls, all those things. Okay. So the first and foremost thing that we will do is the tax regime. Okay. So based on this tax regime, we will further configure the subsequent configurations. Okay. So to create a new regime, so I'll have to say create. Okay. So here we can give the name. So probably I'll just give the name as by UAE.
And we can create for UAE multiple tax regime codes. Like maybe we discontinue
System will
sometime
not,
or
yeah,
later on.
yeah, system will not restrict us in terms of only one per country, but we will not have requirement to create multiple regime in this case.
Okay. Okay. So, but I'm saying like I mean I created two. So I mean, how does system know which one to be active? Like, is there an active option or something?
So that is based on the tax rules that you're in. Let's say I have
Oh,
created Dubai UAE and Dubai UAE 1, and
okay.
while writing the tax rule, so if I have selected Dubai UAE, system is going to pick only for this regime, not for the UAE 1.
Mhm. Mhm. Okay.
Okay. Because that is where we are linking our ledger and all those things. So basically, if ledger one is associated and this and both the I mean both the configurations, that means tax regimes are in active status. So if I have written rule for one, it is going to take one only.
Okay.
Okay. Yeah. So I'll just give the name. Okay, so you can select the effective date. So I'll just change this to 2023 and I'll just remain as it is. Okay.
Also,
And
we can change it in future. Like later on, we can edit it effective to date
no,
and from
you
date.
will not be able to edit it because certain things that will stay as one-time activity. So this is one part of it. So you will not be able to change it at later.
Okay.
So you'll have option to only end it this. So this will be fixed.
Okay.
Okay. Yeah.
Okay. Like
So
because like I'm just
yeah.
saying like for example, now
Okay.
for example is tax in Oman came like I think 2021 April.
Okay.
Okay,
Okay.
for example, like initially they announced like January 1. So maybe
Okay.
we configured January 1, but later
Okay.
on they postponed to April, some 16
Okay.
or 15. So I'm saying that
Okay.
time, like then we need to do the configuration again. Like, like normally IT side we create and keep it in system, right? So then we'll have to do it again because the date cannot be changed, right? If the
No,
government
this
postpone.
no, this will not take into effect in terms of transaction uh, because if you want to generate tax, let's say 2016 January, if you have received the notification, you might have configured the system and you might have created the rules. Okay, so now you don't want this to generate the tax because the notification did not get materialized. So probably in the year 2018, it has been materialized, let's say. Okay, so now in this case, what you will do is that you will disable the tax rules and you will start your tax rules from 2018 because this is the basis for us to generate the tax to the transaction.
Okay. 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 So it's the tax rules, not regime into
Yeah,
deactivate. Okay,
yeah,
understood.
correct.
Thank you.
Because this is just like the master for us. It's the tax rule which plays important role. Okay. Yeah, so then we have certain controls here in terms of having the stats regime created. Okay, so we have something called tax recovery. So tax recovery is something related to the filing. Okay, so meaning if I have an option to, let's say I am into manufacturing. Okay, so now I manufacture this particular item and now I wanted to basically get the exemption or return from the government. So in this case, I will have this recovery rate defined, okay, and this recovery rate will be associated with the tax rate. Let's say VAT. So VAT 5%. Okay, so there are certain items or services that will be exempted or I'll get exemption from the government. So for those scenarios, I can use this tax recovery. So if I'm not at all using this tax recovery option, so we can disable this, but mostly I have seen option to have the recovery. Okay.
Yeah. So when
And
you say recovery, like for example, you are able to do the input tax deduction. Is that what you are
correct.
saying? Recoverable?
Yeah, yeah, correct.
Okay.
Input tax.
So so in the this country it is allowed in the regime. That's
Correct,
what we are sitting. Okay. So it
correct,
is allowed.
correct.
Correct.
Yeah, correct.
Allow override an entry of inclusive tax line means.
This means that we can do the manual entry. So let's say for this invoice tax did not sorry, just give me a moment. Yeah, so this is nothing but the manual tax rates that we can add to the transaction. So instead of system generating it.
Means like for example, if you are having this automatically coming tax, so
Okay.
if we can overwrite it. Is that what you're saying?
Correct. Yeah,
Like
correct. We
automatically
can
5%
cancel.
come, maybe you can change into 15%.
Yeah, so we can
Okay.
cancel that line and we can add new line to the transaction.
Oh, okay. Before saving, correct?
Yeah, correct. Before saving.
Okay. So normally that should be activated, right? Or no? What is recommended?
I mean, recommended is not to use this. This is very rare scenario that we might use this option because if I say manual addition, so system might be generating, let's say 5%, but then business will change it to lower rate, but which will not be an expected behavior. So if at all there is a change, also will not be able to say whether this is manual addition or this is system generated.
Uh-huh.
So those issues will come into this thing. So usually we will not recommend this, but then if business wants to edit or do this thing, we can enable this.
Okay. Okay. So like now
Okay.
can we enable like this to
Yeah, sure. Okay. And then we have the tax exception and the tax exemption. So exemption is the lower rate that we know, and exception is let's say in a scenario that I don't want tax to be generated. So this is the rule that we have written. But then exceptionally, I can add probably a different rate. Okay, so that's the difference between the exception and the exemption.
okay.
Okay, and then there are few defaulting options that we have. So in terms of tax currency, I can default say I think AED.
ED, yeah.
Yeah, okay. And then I can say minimum accountable unit. So these are all optional things, so I'm not giving it. But then if we wanted to give minimum accountable unit and
Means
minimum
uh,
accountable meaning, so let's say I have set it up as 10 rupees. So now lesser
uh-huh.
than 10 rupees, it is not going to work for the tax rules. So this
Going
will
for
be the
the
minimum amount.
tax accounts.
Yeah, minimum account to generate the tax.
Okay. Okay.
Okay.
Okay. You mean
So
the invoice value has to be some certain value so that
yeah,
tax will be calculated? Is that
yeah, correct.
okay? Okay.
Usually we will not set that limit, but we have option.
Okay. Fine.
Okay. And then we have this rounding rule. So rounding rule is applicable only for the taxes. So now if this is, let's say, 10,000.46. So whether I wanted to bring it to 10,000, or whether I wanted to bring it to 10,001, or how do I want to do that? So this is similar to your Excel functions, whether you want to bring it down or up or closer to that. Okay. So
Okay.
this we can give it. So based on that, the tax amount will be rounded off.
Normally, any idea what we give? Like, is it nearest or
Yeah, normally it will be nearest.
okay?
It is the nearest option that we have given, but apart from that, if we wanted to go for down or up, that is also possible. Okay. And then the tracks precision. So precision, of course, it's the 2 or 3 digit, whatever this thing we want.
Decimals. Is
Yeah,
that what you said?
decimals. Yeah,
So normally it's
decimals.
like two.
Yeah, generally it is two, because more than two will not have this reported to the government. So it's the general norm that we'll have to. But then if business have a specific scenario wherein they wanted to have more than two or less than two, so that we
Uh,
can set it up here. But usually
okay.
it
I
is
think
two.
correct. I think some countries like this currency's high value have some issue. Like Oman and all, Kuwait
Okay.
and all, they have like big currencies have value high, right? I think they may have this issue of three
Okay.
character. I mean three decimals or something. Okay. Please continue.
Yeah. Yeah, and then we have this option called tax inclusion. Okay, so inclusion is nothing but this tax amount will be included in the invoice amount. Let's say the bill amount is 10,000 dinar. So now the tax of 1,000 will be included in this 10,000 dinar. Okay, so that's about inclusion. So if we are using this inclusive tax, so then we can enable. I'm not sure for the Dubai or Oman. So if we have probably the inclusive tax that needs to be handled, we can set it up as an standard inclusive. So apart from standard inclusive, we have also the special inclusive and the non-inclusive. So non-inclusive is we are saying explicit, which means that if the amount is 10,000 and the percentage is 5, so it is going to generate 500. So which means the total bill amount will be 10,500. Okay. And in case of inclusive, we can go for the standard inclusive or special. Special is nothing but if I want to bring in the special rate, so that I can bring it. So that's the difference between the special and standard. But usually it's the practice that we use the standard inclusive handling if at all we have the inclusive tax that needs to be configured.
Yeah, but like for example, like then what if like we have like both the scenario? For example, like one company,
Okay.
okay. Now, normally what I know is, for example, if you go to our supermarket or restaurant,
Right.
the bill what they give is like inclusive.
Correct.
Whatever the same, maybe another company who's doing business to another company, like
Right.
maybe within IT company and all, invoicing, then I think that time they follow like what is that? Non-inclusive.
Right.
So where like your example, correct, like 10,000, if it
Right.
is 5%, like 10,500, that is exclusive.
Correct.
So if it is 10,000, then it's like 9,500 changes the
Yeah.
uh, net amount, and 4.86 is something the VAT amount. So
Yeah.
that is
Correct.
like inclusive. So I'm saying maybe one company have like restaurant as well as maybe they have this business to business, right?
Okay.
And then how do we handle like both? Like
So in that case, probably we can have this as blank. So I can leave as it is. And at the tax level, I can have this enabled as inclusive. So there I'll
Okay.
have to create two. So one will be inclusive and the other one is non-inclusive. So while writing the tax rules, I'll have to specify at what condition the inclusive tax will be applied and what condition non-inclusive will be applied.
Okay, in the tax rules, right? Not in the tax rate code or something.
Yeah, not at the tax rate code. So it's
Okay.
basically at the rules level that we'll have to check what condition that we can write in terms of this. So either I can go by the attribute that I'm going to create. That could be the transaction attribute. So while creating the payable invoice or the receivable invoice, so I can say that this is my transaction attribute, and based on that, I can write rule saying if this attribute is selected, then generate this tax rate. Let's say
Okay.
the inclusive tax.
Okay. Okay.
Yeah. And then we have something called jurisdiction. So jurisdiction is nothing but the region. So this we will not use much. So this is created only in terms of understanding or having it reported if at all we have requirement. Meaning, let's say I have Dubai, I have uh, let's take inside Dubai we have seven Emirates. I don't
Yeah,
remember
correct, correct.
exactly.
Yeah, it's
Yeah,
seven Emirates like Dubai,
yeah,
Abu Dhabi,
yeah.
Sharjah. Yeah.
Dubai Abu Dhabi. So I can create one as Dubai jurisdiction and the other one as Abu Dhabi. So different jurisdiction I can maintain. So if at all I wanted to maintain multiple jurisdiction, I can enable this checkbox, allow multiple jurisdiction.
Okay. So you mean tax regime is one. Inside that, you can create multiple jurisdiction. Is
Yeah,
that correct?
correct,
Like
correct.
our state, right? Like
Yeah, correct.
Karnataka, Andhra
Yeah,
Pradesh. Like,
yeah, correct.
okay. Thank you.
Okay. And then the tax rounding over it. So we have enabled the tax rounding, but then if we want to override this rounding which system has generated, so I can enable this option.
You mean the rounding rule nearest based on that, whatever generated, we want to override. Is that
Yeah, correct.
the setting? Okay. Okay.
Yeah, correct. And then we have the exchange rate. So exchange rate is nothing but in terms of importing the item from some other country. So now the currency will vary or it will differ. So in this case, if I want to basically generate this amount in the functional currency, I'll have to specify this is the exchange rate.
Okay, so like, I mean, import is fine, but also like, I believe like, for example, there are some companies who do transaction within UAE, Dubai in
Okay,
dollar. I mean, it's
okay,
companies in Dubai, both the companies, but still their invoice everything will be in dollar. So that
okay.
time, if you are converting, what do you call that? Functional currency, yeah?
Yeah, functional currency is nothing but the local currency. So if the invoice is entered in USD, so that will not be handled here. So that will be handled at the organization structure. Meaning when we create this ledger, so we will say that this is created in USD. Okay, so that when we create this invoice, by default, the currency will be selected as USD, but then for the reporting and the compliance requirement, so we can create the secondary ledger and have that created in the AED dinar.
Okay, okay. So what I was telling is like that structure level, the currency
Okay.
will be AED only, but some transaction, some billing they do in dollar. Like not all invoices, some invoice
Okay.
they will be dollar.
Okay.
Just example, yeah.
Okay. So in that case, probably they can give it at the supplier or the customer level because we have this defaulting currency, both the invoice currency and the payment currency at the supplier and customer. So probably there they can give this is in USD. So
Okay.
other customers still they'll be having it as dinar. So for this one only they can have it as USD.
Okay. Fine. Thank you.
Okay. And then we have the reporting tax authority and then the collecting tax authority. So collecting tax authority, we know in case of uh, so this is in terms of filing. So if at all we wanted to basically maintain the tax authority name, so we can enable it. So we will have to create one party as tax authority, and probably we can say this party will do the reporting and the collecting as well. And in case of different parties, probably we'll have to create two different parties and say one is reporting and the other one is collecting. Okay.
Okay, I mean, like for
So
instance, you're saying like this GST authority or the VAT authority will
yeah,
be we create like a party means like we'll create like a master party
correct.
master.
Yeah, correct. Like a supplier.
It's like a supplier. Okay, so
Yeah,
like a supplier will collect and we'll just mention that code here.
yeah, correct.
Okay, okay,
So if you see, so if I just select here, so I'll have these parties already created in the system. Okay, so similarly, we will have for the other countries as well. So we can create those there and we can attach it here.
okay, fine. So I mean, we need to create the master first, right? Party
Yeah,
master. Then
correct.
only we can
Master
attach.
first.
It's not like system is available already.
Yeah. So this we can add it at later point in time also. So you
Ah,
can
okay, okay.
just complete this and later you can add this as well.
Ah, no problem. Okay.
Okay. Yeah, and then lastly, so we have this default recovery settlement. So if it is within the terms, let's say after 30 days or after 45 days, so which we can specify as deferred, or if it is settled on immediate basis, so we can say immediate, but this is optional. Okay.
Sorry, I didn't understand. Recovery means settlement
So
means what?
recovery meaning the input tax credit. So
Ah,
I
to
see.
avail it.
Yeah,
Like if
so
it is
this,
monthly or quarterly filing,
yeah.
then if you put deferred, what happens? It will update the tax account.
Yeah, it's not updating the tax account. It is about the settlement of the input tax. So how we are having it. So
Okay,
which
so we can
means,
like
yeah,
tell me please.
yeah. So which means that let's say I have made the trade for $10,000. Okay. So now the return that I will get is let's say $2,000. Okay. So now the settlement meaning this $2,000 is what we are referring to the settlement.
Okay, so okay, it is like either payable or receivable from government.
Correct. Correct. So this we can set it up as immediate or deferred. So this is just optional case because anyway, in terms of doing this, uh, the settlement from government, so it's not that directly we are going to link it through Oracle. So we'll have to bring in the integration into this because that is when this will interact with the government portal and then we'll get the settlements updated in the system. So if we are not going to use that, so probably this will not bring in much advantage to us.
Okay, okay,
So in that case, we can leave this as blank.
okay.
Okay. So then we know the legal registration number is nothing but the tax registration number. So this we can use it.
But tax registration number will be like company wise, right? If we have three
Yeah.
companies, maybe they have three. So then this is common, right? Like for UAE.
No, this is not that we are setting up the registration number. So we are just saying whether we can use the registration number or not. So that we
Okay,
will
okay,
attach it to the legal entity. So there we will
okay,
specify that this is the tax registration number. But this option is to say that whether we are going to use this registration number or not.
okay, okay. Fine. Understood. Thank you.
Okay.
So we'll
And
activate that, right?
sorry.
We'll activate that, right?
Yeah, we'll activate it, but for time being, I'm not using it because this option we can do it later, or let's say I'll activate also. Okay, okay, yeah. So that's it on this. And then finally, we have this compounding level control. So compounding is nothing but tax on tax. Okay. So this works again based on the rules. So this where or when we will use this option is that. So let's say I have a requirement to calculate the special rate the cess rate based on the tax that is generated. Okay, so for example, the salary. So if the salary is more than let's say 20 lakh, so we wanted to generate the cess tax also. Okay, on the tax generated. So for those scenarios, we can use it. I'm just saying as an example for the salary because salary it's the different calculation rules that is written in the payroll module. But
Okay,
just for
okay.
understanding, I'm saying this
So
option.
you mean like now we have taxes like VAT, then you have income tax,
Right.
uh, withholding tax like that, right?
Not exactly. So let's say my tax rate or the tax amount for this particular invoice is let's say 1,000 rupees. So now the additional tax that I wanted to generate is on the tax amount that is calculated to this particular invoice. So let's say amount is 1,000. So on this I wanted to generate 10%, let's say 100 rupees. So this compounding option will help me to calculate the tax on generated tax. On 1,000 we are
Okay.
saying it is 100 rupees.
Okay. And on 1,000, I mean on 100 again you will do again tax. Is that I
Yeah,
didn't actually
that
get it?
we can determine
It's
based on the
like our
tax.
this cess and all, right? Is that what you're
Yeah.
saying?
Yeah, so you
Okay.
can compound it at multiple level also, but I mean I
Okay.
have not seen multiple compounding. I have seen single compounding for India scenario, but in multiple compounding also we can write. But I mean I have seen the
Okay.
single compounding, so I'm just referring to
Okay.
that. Okay. Yeah, so this is first thing that we'll do. Okay, so that is creating the tax regime. Okay, so once we are done, so we can just say click continue. So which will take us to the next screen, that is to give the party. Okay, so for now I'm using Vision operation. Okay, so this is the party that I'm using. So this is nothing but either your business unit or your legal entity. So in this case, I have taken the legal entity, but you have option to choose the operating unit also. Okay, so since I have selected this as the legal entity, so I'm able to see this country name as United States and all those information. So now I will have option to basically say this is common configuration, okay, or I can say common configuration with party override also. So what is the difference? So the difference is that whether I'll be able to configure only as a common configuration or I can say with party specific also. So when we say party specific, so let's say I have two operating units. So one for Dubai and the other one is for Abu Dhabi. So now, if I want to write rules for, let's say, in global, so certain cases I'll write this as VAT. So VAT will be applicable for both Dubai and Abu Dhabi. Okay, so in this case, I'll say common configuration. But if I want to write a specific rule for, let's say, Abu Dhabi, I'll say party specific, which means that I will have to specify this is Abu Dhabi's rule that I'm trying to write here. So now optionally I can select this one. So I can use both the common or the global rules that I can write, also the party specific I can write. So that is this option.
Okay.
Okay, so I will
Party
select.
means like, for example, one company is having five entities in the
Yeah,
country,
yeah,
like restaurant business, maybe manufacturing. So those
right.
five parties, what is here party name, right?
Yeah, correct. Legal entity. Legal entity is what we are trying to say, the party. Legal entity or the operating unit.
Okay.
Okay. Yeah. So then if we have any exception that we wanted to have it so that we can have it created here. But in my case, already I have selected this as common configuration with party override, so I'm not giving it here as an exception. Okay, and and then I will have to specify the start date. I'll just change this to 23 because that is the one that I have given at the top when we create the regime. Okay.
Okay.
Yeah, and that subscription is separate module actually. So if we have the subscription module also enabled, so probably we can do the configuration for the service subscription also. So if not, probably we can just say complete
Like,
or
what do you mean by
finish.
subscription? Like, for example, the company is doing service-related businesses.
Yeah, correct. So they will have the subscription meaning. So this is separate module. So let's say we have deferred revenue or we have deferred expenses as part of our business cycle. So there are certain companies that they will opt for the subscription module as well. So if we have the subscription module that is enabled, so then we can use this option to configure that, because based on that we will basically specify the rules. So this subscription, even I have not worked on it. Even I know only theoretical part of it because
But without this
uh,
also, like, we can run scenario of like this service item invoicing, right?
yeah, service item, yeah, kind of a scenario we can say.
Okay.
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 Yeah. So once this is done, so then I can say finish.
Party name anything in UAE or it's like US we are selecting, right?
Sorry, I missed it.
The party name, like I think you selected US, right?
One moment. I'll just open this again. Yeah. What was the question?
I think we assigned Vision Operation US as a country. Okay. Country name is now UAE, but earlier
Yeah.
it was showing US. That's what I didn't understand. Okay. So we can select this party name and country we can manually select.
Yeah, I mean this, since we selected here as AED, so I have selected here as an United Arab Emirates. So
Mhm.
this is created with US currency, so that probably we can generate it at that point. So this will not validate whether it's in the same country or the same region, because here we are giving it as common configurations. Okay, so probably if we are giving the party specific configurations, probably at that time system will restrict. But since we have given it as common, it can be, I mean, we can create the rules for both the entities. So system will
Okay.
allow basically us to attach the different currencies party also.
Okay. So same system. If I try to create Vision Operation in Saudi Arabia country, it will allow.
Yeah, yes, it will allow.
And the functional currency will be like this, like a local currency. Like functional currencies, we need
Yeah,
to set in the company, right? Or here we said it's fine.
yeah. So this is nothing but tax related currency that we are setting up. So the functional currency or the accounting currency will be picked up from the ledger. So in that case, it will be US dollar. So
Okay.
only tax will generate in AED.
Okay. Okay.
I mean, I use this because I do not have active this thing, because I'll have to do the entire organization structure and all those configurations for GL, APA, or all those modules. So for that
Mhm.
reason, I have taken this one. So else will be selecting, of course, the AED party only.
Okay. Fine.
Yeah. So this is fine. We'll go with taxes.
Okay.
Okay. So the next setup that we have is taxes. Okay. So I'll have to select here the regime that we created in the previous configuration. Okay. And then here I'm selecting this as global configuration. Okay. So this, how do we decide whether we are going with global configuration or we are going with party specific configuration? Okay.
Okay.
So now, in case I have two or three entities, let's say I have my business into retail sector, I have my business into manufacturing sector, and I also do construction and the trading business. Okay. So now in this case, if I want to generate, because all these three are operated in Oman, let's say. So now for all these entities, I will not be able to create it manually for each one of the entity. So instead I can go for the global configuration owner, which means with one tax rule or one configuration, I can manage taxes for all these three entities.
Okay. It's like only one configuration for all companies. It will apply.
Yeah, correct. So that's the purpose of having global configuration owner. But then if I want to generate it specific to the party, let's say in the other scenario, so I have one entity, manufacturing entity operation in Oman, and the, let's say, retail sector it is in Abu Dhabi, and then I have another entity in India. So now in this case I will not be able to manage it using global configurator, because if I say global configuration, so this stats, that is VAT will be shown to the India entity, and IGST and the other components will be visible in this one also. So there I will not be able to use this option. So there I'll have to specifically say this is specific to the party. So so these are the scenarios. So based on this, you can decide whether you wanted to go for the global configuration or the party specific configuration.
Okay, so now can we select party because I may try to configure for Saudi Arabia. So
Okay.
then we have to try with party, right? Okay.
Okay. I mean that we can configure. So this will be applicable when you have, 1 minute. Okay, it's division operation that we do. Yeah, so in our case, basically, if it is one country, we will not have any issue. Okay, so if it is, let's say, two different countries that is involved, so then we will have to pick that particular entity and do the configuration. The reason being, so let's say, so in this case, we have written this configuration at the legal entity level. So now under one legal entity, so if I have 10 different operating units, so then I
Mhm.
can go for this option. So let's say in the other case, so I am writing this rules based on the operating unit. So then what I will do is that, so I'll have to write rules for each of the operating units separately. So that's the,
Ah, okay, I
so
understood
that's,
now. So it's ideally like basically within regime code. So anyway, it is not going to impact the other countries, right? Only it will
yeah,
impact the regime code Dubai related companies.
correct.
The global means it is global within the Dubai or UAE. Is
Yeah,
that correct?
correct. Yeah,
Ah,
correct.
okay. Understood.
Okay, so I'll just
The tax
say
source
this is.
source means what? Tax source?
So tax source is nothing but whether we wanted to create a new one or we are going to select from the
Ah,
existing one.
copy, huh?
Because yeah, so because if we have already created the taxes, so let's say this is second regime that we are going to create. So when we will use this option as that, so let's say I have already created the taxes for one operating unit, and for the other operating unit also I'm going to use the same tags, then I can say create from the existing tags. So it's just the list of value that I can select, but in our case we are going to create it as a new tags.
Okay.
Okay, so I'll just say VAT standard. Okay, so this is nothing but the type that you can specify. Okay, so if it is VAT, but this is optional, so this is not mandatory one to attach. So probably if we wanted to give, so we can add it from the list of value. So in this case, I'm selecting this as VAT. Okay.
Okay.
And by default, by default system will pick this effective date from the tax regime. So probably taxes if we wanted to change at later point in time, or I don't want it to start with the regime date, so which I can change it manually here, but I will not be able to uh, bring the previous date, but I can do the date to let's say 2024, or after this date I can do it. Okay.
Okay. Future.
Yeah, future. Okay, so then we'll have to ensure that this checkbox is enabled, because if I don't enable this checkbox, this stats what we are creating will not be available for the transaction. Okay, so that's the thing. So yeah, so then the geography type, all those things are nothing but our country. So how do we want to select this? So in our case, it would be the country that we will select. So for India case, it is state, because based on what we wanted to generate the test. So if it is within, so let's say in case of GCC, so instead of country, so we can say county or something, our region. So based on that, we can generate the taxes.
Okay.
Sorry, these are current options. Okay, and then the tax currency, again, it's the same option. So this is picked from the tax regime. Okay, so these are all the things that we have seen there. Okay. And then we have something called applied amount handling. Okay, so applied amount handling is nothing but the additional tax amount that we are basically adding to that particular invoice. So whether we wanted to prorate it, or we wanted to recalculate that particular invoice, so that is this option. Okay,
Sorry, I
so
didn't get
I
you. What is it? Like you can recalculate, like by system calculate. Is that what is the setting?
Yeah, so I will select in this case the recalculated, because I don't want to prorate it between multiple this thing. So I'll just say recalculated, but optionally you have option to prorate it also.
Okay.
Okay. And then we have option called offset tax. So offset tax will be used when we have, let's say this particular supplier or the vendor is not registered with the government. So now the stats will not be paid by the supplier, but instead it will paid by the customer who's purchasing this particular item. Okay. So in that case, we can set as offset tax. Okay. So this is standard. So for this, we will not create what do you call the offset tax, but then we will create one with the name VAT standard, and then we'll create the second tax, which will have the option as set as offset tax. So now when we generate this taxes, so I have option to basically attach the offset taxes as well. So there I'll say if this is the tax, then what will be the offset tax. So firstly I'll have to create the offset taxes also. So the way that system will work is that, so now the standard VAT will say as 1,000 rupees as one line, and the second line will say offset tax as minus thousand or 100, whatever the amount. Okay, so now this will ensure that the taxes generated by the system will say it is zero, which means that this is offset tax, and it will be paid by the buyer. Okay,
Okay.
so that is this option. And then whether if we are creating this only for the reporting purpose, we can enable this option, but we are creating this for the transactional entity, so I'm not enabling this checkbox. Okay. And then we have certain controls here similar to the tax regimes. So if I come down, so this is again the similar option which we saw there. So as I said, if we have the requirement to enable the inclusive, so that we can handle it at this point. Okay. And then the other options are same thing, the manual addition and then the tax rounding override. Okay. And the calculated tax lines. So this is similar to the manual lines. Okay. And then allow manual entry. So for now, I'll just enable these two options. Let's say I enable the rounding option also. Okay. And this option is basically to say that system will allow the duplicate tax registration number. So usually we will not allow this option, but we have option in the system. So if at all I wanted to maintain two tax registration, one tax registration number for both the entities, so then I can use this option. Okay. So this will happen if I have probably business in two different regions, but then I will have one registration or the one registration number. Then I can enable this option, duplicate tax registration number. Okay.
Hmm. I mean, can we allow like because I think that scenario is common because maybe in UAE there's two
Okay.
companies, maybe they're part of same VAT group,
Okay.
same owner, so then
Okay.
they have a common number both the
Okay.
companies.
Okay. Okay. Fine. Okay. So this is one thing. And then we have the stats exemption, so that's the same option. Okay. And then we have the stats recovery controls. Okay, so firstly we will enable this as stats recovery. Okay. And then optionally, if I want to override, so I can enable this option also. Okay. And then if I want to write rules for this recovery rate, so which I can do it, but there are less scenarios wherein you will have to write rule to generate this recovery rates. Okay, but in case we want to write rule for that, we can enable this option.
So
And
I think you're talking about like the recovery means the purchase input, right?
yeah, input
Ah,
credit.
so yeah, because like I think some scenarios they'll not be able to take like 5% input. Only maybe it's like 60% not you can take 40% you cannot not recoverable. So for such cases, I think you need to activate this, right?
This we will basically attach it to the tax rates. So now when we create the tax rates, so we will say specifically if it is 60% recoverable or it is 40% recoverable. But this scenario is that if even if it is the rate is same, so if we wanted to basically have two different recoveries, so the rate, let's say it is 5%, but then the recovery would be 40% for one, 80% for another one. So in that case, you can enable this option and you can write the rules for that.
Okay. Because like normally as a law, what I understand is like employee expenses, right?
Yeah.
So such cases, I think you can't recover fully. Like if
No,
maybe one car is used for employee as well as business purpose, then
right.
maybe whatever is that employee related use has to be not recoverable. Then you need to yeah
Yeah,
as per
the same taxation, employee level taxation, correct.
okay please go ahead.
Okay. Yeah, so then the primary recovery type, so it's the standard that we will be using it. So probably if we want to define our own recovery type, so this is nothing but the lookup that we will be creating. So this will not play major role. So it's the just the option that we are going to attach. Okay. So I'm just saying because what will have impact is that the recovery rate that we are attaching it with the tax rate. So in this case, I'm using the standard recovery rate. Okay.
Okay.
Yeah, and the secondary recovery rate is the override option. So if I have the secondary recovery rate that needs to be enabled, so probably I can use this option. Okay.
Okay.
And then here we have certain defaulting options that I can set it up. Okay. And here I'm saying allow tax rate rules. Okay, because this is major thing that we'll have to enable the tax rates rules, because that is when even if we write the rules, system is going to pick that particular rule associated with this ledger or the legal entity and default the tax rates at the transaction. Okay. And then this is the same option that we saw. So will we create the tax regime? Okay. So these are basically the optional tax reporting codes which we can use. Okay. So probably if we have any such requirement to capture the tax reporting type, so that we can probably use this. So this is just for the tracking purpose we can use it, but this will not play major role in terms of generating the taxes.
Yeah, what I'm saying is when you want to give a tax report, right, for the business to understand what is input output in the full month. So for that you need to enable this report, right? Is it?
No, for that you will not need this report to be generated, because when we wanted to pull this one, so this is based on the tax rates that is generated. So ideally, if you see the input tax credit and all those things, so we will have one account for in the recovery. So recovery is what we are referring to, the input tax credit. So we will see this account is for input tax credit, which we will associate with the tax recovery. Okay. And then the VAT standard rate, we are going to attach it to the tax rate, the regular tax rate, VAT standard. Okay. So now, if I want to pull out the report by party or by the total recovery as a whole for the period, so which I'll be able to handle it at that level itself. So based on the reporting code, we will not be able to pull the transaction or do it for the filing also. So this is the optional configuration to in terms of tax reporting code if I want to maintain it. So which I can use it for my custom reporting. So if I'm creating a custom report, so wherein I wanted to basically pull this details also, because based on this, I will submit my what do you call, I'll submit my filing to the government. So for that I can use this option called tax reporting code, but this input tax credit, that is purchase or sales, so that still I'll be able to do it using the standard configuration itself.
So like India, like what do you put here, like in tax reporting type
Yeah.
code, India?
Yeah.
I mean, what do we add normally? Like, is there a code predefined, or we can put whatever we want?
Yeah, so this is just the lookup that we'll be adding.
Ah, okay. So this
So
look.
so here again we do not have a specific thing associated to this. This is completely optional. So in what scenarios you will have tax reporting code is that, let's say uh, for US scenario, I'm just taking as an example. Okay. So let's say I wanted to maintain this tax code as part of my compliance requirement. So when I submit my details to the government, so I cannot say this is the city tax and this is state tax. So instead, I have a separate naming convention when I submit it to the government. So I can have this as a tax reporting code. So I will have a custom report wherein this custom report will tell me what is the code that is being used, and This will stay as a mapping between the filing and the transaction. Okay, so if I have any such requirements, so probably I can use it, but for filing, still we will be able to handle using these standard options. Okay,
Okay.
yeah. So then the tax account optionally we can enable it here, but usually we will not enable the tax accounts at the taxes. It is at the tax rates that we will enable the or give the tax accounts, because tax account meaning, let's say under this particular tax, I have only one rate that is entered. So let's say I have only VAT standard. So then I can give directly here at this stage. Let's say under the stats, I have zero tax. I have probably two different, or let's take example as in India. So I have IGST, I have CGST. So now I'm creating this as GST, and under this, if I'm creating different rates, then I will have to give the tax accounts at the tax rate level. But if I'm going to create only one tax rate under this particular tax thing, then I can say directly here itself I can create the tax accounts. Okay,
Okay.
so it's basically our call whether we wanted to manage the tax accounts at the taxes or the tax rates.
Okay. But rate is what recommended, right? To have flexibility.
Sorry, can you repeat again?
I mean, like, but in the rate level is what is recommended for flexibility, right?
Yeah, it is at the rate level. That's the recommended option.
Okay. Thank you.
Yeah, so I'll just say apply. Geography type, investment, parent geography. Okay, since I have selected here, I think it is asking for it. Okay, so we have created taxes. So the next thing is to create the tax rates. Sorry, before that we'll have to create the recovery rate. Okay, so before creating that, so I'll just create one tax status and one tax jurisdiction. So tax jurisdiction, of course, we know it's nothing but the region. So tax status is again will not play a major role. It's just the status that we are trying to give. So usually it's the standard we'll give, or probably if it is active, or if this is inactive, or this is notified. So all those things we have option to basically maintain at the tax or tax rates. Okay, because for one scenario which we have said, so the notification or two, so you wanted to have that information captured, so probably you can capture that as tax status. Okay, and you can associate with the new taxes that we are going to uh, use it for the transaction. Okay, so that
Okay.
is the option of tax statuses.
Okay.
So I'll just say create, and this is the file.
Taxes is for the entity, right? Or like the product.
No, not product entity.
Okay.
For this particular regime, so we'll have the tax statuses created. So this tax statuses will be associated with the tax rates.
Okay. Like taxable, it is exempted if it is
Yeah,
like economic zone or something.
yeah, correct. So first thing I will create one as standard. Okay, and the remaining options are same. So it's just the code that we are creating. So here we do not have much setup or control in the speech. Okay,
Okay.
so I'll just say apply, and also quickly I'll create it for the tax detection also. So jurisdiction again I'll say okay. One minute. I think we created taxes already. Yeah, we have taxes already configured. Okay, let me try to first add it here. Okay, okay, so the geography we did not give, so just asking for it. So effective date is 2023. Just give me a moment. Hello. Okay, so that's what. So since we did not give this geography there, so it was showing. I mean, it was not displayed for us. So I have just given the geography and I mean the country, and I have selected this country name. So now we are able to create it. Okay. So I'll just say. So here also we can apply the tax accounts, but usually again we'll do it at the tax rates. So I'm just skipping this part. So I'll just say apply, and then I'll go to the tax recovery rate first, because while we create the tax rate we'll have to attach the recovery rate. Okay, so first thing is regime, and then the configuration owner, and then this one, and recovery rate for now I'm saying, let's say, okay, so let's say I'll say 60% recovery. Okay, and I'll give the percentage as 60 because the same thing, right?
I think like I mean we can give 100 only, no problem for our test.
Okay.
And like in the sample template of that Oracle website, I've seen like they're creating like two recovery rate. One is like 100 and one is 0.
Okay. Okay, so this account probably I'll take it from the existing one. Okay, so for now I'll just take this account
So
because I do
so
not
we'll
have
create
the.
like separate account for zero VAT and everything. Will have separate accounts, GL accounts, or
No, separately, if it requests, we can create it because when we will go for separate account is that if I want to understand separate, I mean 0 percentage as separate reporting and 5 percentage as separate reporting, we can go for creating this one. But if we are taking the report at the subledger level, of course, we'll have this rates and all those things. We'll be able to pull from the subledger itself. So if
no
our
need then separate account.
yeah, correct.
Okay. But an output input will have separate accounts or
Yeah, that will have the separate accounts.
and payable also separate.
Yeah, yes.
And for reverse charge, it will be not separate. Like same thing we'll use or
Yeah, for
output input.
reverse charge, we'll use the same accounts because for the reverse charge is what I meant this offset. So one line will be positive and the other line will be negative. So this RCM account, we will attach it to the offset.
Okay, offset tax rate.
Yeah, offset tax rate.
Okay, so that we don't have to activate it like before, like somewhere jurisdiction or tax, somewhere you're trying
Yeah,
to show me taxes. We don't have to. Okay.
taxes. So the
Okay.
taxes will create the second one. So with enabling the checkbox as offset tax.
So, okay.
Okay. I think this combination is.
I'm saying like should we check in other standard this tax recovery rate for other regime? What is the GL
Okay.
used? I mean that's what I think we are trying, right? The account which one to
Yeah.
use?
Yeah.
Maybe other
So
regime, US or some regime, UK regime is VAT, right? So we can try to see what they have used.
okay.
They also have same error.
Yeah, same error, but then they are able to complete the configuration. I don't know what this error is because we are not selecting the expense account
Mhm.
because this must be liability account. We are selecting the liability account only. And
Okay.
the combination also, as I can see, we have the combination enabled and it's active and posting also enabled, but still it says either the account is, I mean, the combination is invalid or it's an expense account. Was ours is not expense account also. Not sure what
Okay.
this. Now, even with this, I'm seeing the same error actually because this is
Implement.
existing. Yeah, because this is existing one which we are using. So even if we try to use the existing one and just say select, it is giving us the same error actually.
I think maybe somebody made a change after all the setup
Yeah,
happened. Maybe that's the reason.
yeah. Okay, so think some issue with the structure because okay, some issue I think probably I'll come back to this one
Okay,
at
no,
last.
no problem. and like yeah.
Because it's just the account that we are left with. I'm not sure what is the issue with account. It's giving some other option. Okay, so I'll just create the tax rates. So tax regime code is the and this was issue. This will give us that standard 5%. This is 5. So here I
Like
will try to, yeah,
in the chat, I just mentioned like some scenarios, like for example, like where VAT will be like 5%.
okay.
This, this is for output, like these are like non-inclusive.
Okay.
So here only we'll define the input also. Input is again tax rate different.
Uh, no, basically the input or our output is determined at the tax rules level. So now here while defining the tax rates, so these will stay as master for us. So that means that for us in terms of tax rate, it is 5% and even this 5%. So ideally, we will create how much totally? Eight tax rates basically.
I think
So
like maybe we need to add for this imports also this RCM scenario, right? Whatever I
yeah,
gave was like for
yeah,
output.
yeah, yeah. So we'll create a separate tax rate for each one of it. So I am taking as in first cases for this one, the VAT tax rate 5%. So probably I can use the same naming convention. But then in terms of configuration, it's the same option that we are going to use. So either it
Okay.
is exempted or these things. So option is same. So I'll take probably this one, the standard VAT, and I will take exempted and another one I'll take probably intra GCC, because if this is within the GCC, we wanted to generate 0, but again here it's the same 0%. Or you can let me know which two you want
Yeah.
to see.
So basically, like as per regulations,
Hmm.
we may have to report like standard rate. Okay. And
Okay.
like there are some cases in UAE where like
Okay.
if you're selling some electronic, it's like reverse charge mechanism. That means
Okay.
like 5% only, but you are not. I mean, it's not you are paying; it is the customer is paying.
Okay.
I mean to
Yeah.
say like your customer need to report it.
Yeah. Got it.
Okay, and zero rate is zero rate like some medical medicine pharmacy and all, some zero rate. And
Okay.
exempt is there, maybe
Okay.
some real estate and all exempt. Intra
Okay.
GCC is like intra GCC export, and then the
Okay.
export zero rate is like foreign exports.
Okay.
Then there is like a zero rate, for example, like sample sales, right?
Hmm.
So
Okay.
sample sales, they have like if it is within 200 dirhams,
Okay.
okay, then it is like 0%. if the value is within 200 dirham for the customer for the year. So if the rate is like above that, then you need to assume some value and put a tax 5% on that value. So the product in the invoice is actually customer is not going to pay, but
Okay.
you need to create an invoice with that 5% considering some value like I don't know, estimated value like
Okay.
that. So that is the other one. Nominal value supply means like free goods kind of scenario.
Okay.
And there is also like in Saudi, like if you are giving like a private healthcare for the citizens,
Okay.
then you need to report it separately, like how much did you do sales for citizens.
Okay.
And yeah, it could be zero rate, okay, but you need to still differentiate it, like for the reporting purpose.
Yeah, yeah. So that's what I was saying, right? So in terms of configurations, we will not have any changes. So how do we differentiate each one of this rate or this is that? So based on the transaction attribute that we are going to select, so we can say that we wanted to generate these taxes. So it could be the exempted rate. So if it is exempted rate, so probably we can select there itself saying that at the product category level. So we can say this is exempted rate. So based on that selection, we can generate the taxes. So the rate will be still zero, but the name or the tax name that we will look at it is either exempted rate or intra GCC or
Okay.
export rate, so that we can configure at the tax condition set.
Okay. Okay. And
Okay, fine.
like also this scenario of like standard rate, inclusive and exclusive, then you need to separate tax rate or like it is fine. One tax rate is
Yeah,
fine, but
yeah. So
condition
if
set
it
you need to
is,
adjust.
yeah, so if it is inclusive, so that we will not be able to handle it at the rules level. So for that, we will have to basically define the this thing. What do you call? Separate taxes, and for each taxes we will have to create the tax rates. So now based on this we will have to write a rule saying if this condition matches, then bring RCM taxes. So
Oh,
it's a
okay.
combination of two. We will have to create or handle it at the tax level also, and also at the tax rules level.
Okay. Fine. Okay. Understood.
Okay, so
Mm.
the first thing I'll take is this one, the standard rate.
And also feel free, like whenever you want to stop session, you can tell me, like we can continue next day.
Yeah, sure. I mean, you can tell
I'm
me
available.
when.
So I'm
Okay.
fine. It's something up to you. I mean, I don't know how what the commitments you have.
Yeah, yeah, sure. No issues. I think same issue. It was this. I think someone has changed the qualifier. That's why it's not allowing, I
Mhm.
think. Because product usually will not have this one, the liability. So this is actually given to the natural account, but someone changed and then put it back, I think.
Okay.
Okay, let's see. Yeah, that is the issue. Okay, so I'll just use this. Okay, so I'll just explain what I have done. So I think someone has changed the product to balancing segment and then put it back to natural account is what I feel, and then they have compiled it. So now there could be an issue with compilation, so that's why this did not get updated. So what I have done is that so I have changed this to liability because this account or this field will validate whether this account which we have given is liability account. So for us, the actual account is 1334, which is the liability account, and this combination is also active, so we do not have problem in this one. So problem is the product category. Since they have changed it, it's asking for the liability combination. So which we have given it, okay, and we have processed it. Okay. So apart from this, so there are certain accounts that optionally we can give. So one is that tax expense, and then if we have interim tax that we can do it, and then unearned discounts, unearned sorry, earned and unearned discounts. Okay, so these are the options. So since it is mandatory to give the recoverable account, so I have given only the recoverable account. Okay, so in this case, the recovery account that I have used is easy. VAT is the account I have used.
Okay, so understand. Like now, this is like a tax standard rate, right?
Yeah,
So
correct.
here we will, assign one recoverable liability GL and the output tax GL where we will assign.
No, it could be the input or it could be the output. So in terms of account, we will assign it when it comes to the tax rate. So in this case, I did not assign input or output because I have given the standard VAT rate. So the input or output, I can assign it at the recovery rate. So recovery rate will tell me that whether this is used for input or output. I mean, we don't have restriction in terms of system, but usually we'll have one VAT rate defined here. Okay. Optionally, you can have it configured by tax or the tax nature also. But in our case, we did not go for that since we will get that list based on the tax rate itself.
Okay. Okay.
So
So something
probably,
this
yeah,
account is basically what, like the tax account
stand
which will hit when you do a invoice
correct.
or you do a purchase invoice posting. This is a tax account which is going to hit,
Yeah, so this is the tax account which is
or it is the payable one. Yeah.
that's what. So payable or receivables, we did not segregate at this point. So probably if we want to segregate, we might want to have the tax rate also defined, saying that inward or the outward. Because since we have given this as an standard rate, I have chosen the standard account. So probably if we have the inward tax rate separately, and then the outward tax rate separately, so I can select here whether the inward or the outward account.
Okay. If it is like different accounts, then you mentioned that other account in the expense account, tax expense. Would you assign
No,
it like?
no, that that we will not assign it here. So we will say we will create the second one, the second tax rate, and we will attach it there because this we are not going to use it for the tax expenses. So tax expenses is the scenario wherein if I wanted to basically generate the expenses for this, that I can use it. But this we are using it as an recoverable liability account. So that's the reason we did not assign it. But if we wanted to probably use the inward or the outward, so in this case, as I said, we'll have to create two different rates.
Okay.
Okay.
Okay. Fine.
Yeah. So yeah. So I'll just say apply. So I'll just take this recovery rate as well. So this will have the recoverable rate as separate, but we do not have the account for that. So I'm just taking the exempt VAT in this case. Okay.
Okay.
So I'll just say apply. Yeah, so we have created the recovery rate and the tax rates as well. So now the next thing that we'll have is that to create the tax rules. Okay, so before that, I'll just explain what are the options that we have in terms of writing the tax rules. Okay, so here, first thing, if you see, so I have these options. That is, if I want to write a tax rule, so I can write it at the product, I can write it at the party level, or if I want to write it at the transaction, so that also I can write it. Okay. So basically, how do we differentiate, or how do we know at what level we wanted to basically write this rule is that, so we can say here, so for instance, if I take this product classification, so this product classification I can attach it to the item. Okay, and based on which I can generate, so this we will use it if at all I have a requirement to generate the tax at the purchase order. Okay, so usually we will create it at the what you call invoice, but if I want to create it at the PO level, so I will have to manually select at the time of creating the purchase order, or if I want to generate it automatically, I can associate with my item. So which means with the item category. Okay. So based on the details that I have given it at the item level and the synchronization rules that I have written, meaning the tax rules is what I'm referring to. So based on the tax rules that I have written, so system is going to basically generate the taxes based on the item selection at my purchase order. So this is one option that we have. Okay, so in this case, what I can do, so I am not basically writing based on the product, but I'm just explaining how we can write this if at all we have to write it based on the item. Okay, so I'll just select this item called product classification. Okay,
Yeah, one doubt,
so
like
yeah,
product means like even this service case, we can use the same classification, product
so
classification.
yeah, service, if we have created it as an item, so we can use it. So if we don't have the services, probably we might need to add categories for the services, and this category needs to be selected while creating the purchase order manually.
Let's say category inventory category set. The
Yeah,
code
yeah.
is okay.
Yeah, so what we'll do is that, so we'll create this inventory category set. Okay, so when we are creating this inventory category set, so let's say consulting is one of the service. So
Okay.
we will create one category called consulting under inventory category set. Okay, so that category set we will attach it here, and against this we will write the rules.
Okay.
Okay, so now when this particular category called consulting is selected, so automatically system detects and it generates the 5% VAT.
Okay. For the line item, and
Yeah,
it
for the line.
will round up.
Yeah, correct. So in that
There could
case,
be scenario like one line is standard rate, another line is zero rate, another
yeah,
line is exempted.
yes, yes, it can be. Okay.
Okay.
So I'll just take this one, the purchasing category. Okay.
Purchasing, like even for sales, it is the same or like this different?
Now for sales, it is different actually, because for the sales order, for the purchase order, we have option there to select the inventory category set as purchasing. So for sales, we'll have to select a different one. I'll just show here.
So in the item master, you have the sales related view where you need to select the sales related product fiscal classification.
Yeah,
And the
sales related
purchasing
classification, we'll have to
sales
specify.
class.
Yeah,
That,
or we can select the inventory item. There will be a separate class for inventory. Yeah, probably this we'll have to check that. So if we are attaching this category to the item, and if we are basically using this item to create the sales order, system will automatically generate. So probably I'll select this option, inventory. So this name, let me see, consultant.
you create classification like this or you create like taxable and zero rated or something like that.
Now, usually we will create one classification saying tax class, so which they have already defined. So for that reason, I'm saying this is consultant.
Okay.
But
Okay, they
usually,
already defined. Okay.
yeah, because it will say it's a duplicate. So to avoid that, I'm just creating like that. Else will select this one. If you see here, they have already created the tax class. So I'm
Hmm.
just avoiding this because these values comes from inventory module. So in the inventory, if they have selected this as the tax class, so if this matches, then we wanted to generate the tax is what we are writing. But in this case, since we wanted to generate it for the sales order as well, so I'm selecting the inventory. So now
Okay.
at the inventory, if this type is identified, then the tax will generate. So that's the rule we are writing.
Okay.
Okay. So I'll just say, but this value should exactly match with our category that is defined in inventory module. So that's
Mhm.
the key actually. So if we are saying VAT 5%, so then it should exactly match with the inventory class that we have defined. So if there we have defined as VAT standard 5%, so then system might not generate tax. So probably that point we'll have to make sure that it is in sync actually. Okay, so I'll just say apply. Okay, so this is one such thing that we can use, and the other one that we can use is that intended use. Okay, so optionally we can use this one also. Okay, And then if there is any requirement to have the tax generated based on the supplier or based on the customer, so then probably we can use this option to have it generated based on the party name. So let's say if I just select one party. Okay, let's take Apple. Okay, so if this tax profile matches, then I wanted to generate the tax. So this is one option which we can use. Okay, but then ideally it will be based on the product or it will be based on the services. But as an option, we have this also. Okay, so this is
Okay.
basically the party tax profits. So based on that, we can create. So another
Okay.
thing option that we have is that based on the classification, if I want to basically generate the tags, so that also we can do it. So we can select here the party classification first thing.
Like particular is predefined or like we define
So
it?
this is this is lookup actually. It comes from lookup. So by default, you will have certain values that is defined already in the system. So
Mhm.
certain things that you can just add to the list. For instance, if you see this LS, all those things. So these are not standard values, so which you can add it at later point in time. So
So
it's a
which is
manual.
standard out of this?
So standard, you will have, uh, if you come down, you will have option called business category, and even this is standard, I think. Even the art class is standard. Even this is custom one.
Which one standards or adding it? What is it?
I mean, this standard, I mean, you will not be able to identify it, so which we might want to compare it with the customer's instance. So that is when we'll basically
Mhm.
get. Yeah, this one is also standard, the customer category.
Okay.
So this one is also standard. I mean, even I will have to compare it with the instance. That is when we'll know.
And like one party classification normally, like for example, he's a locally VAT registered and not registered. Then if it is an intercompany who is a VAT group registered customer, or like if it's intercompany but not a VAT group registered, and if it's a GCC party,
Okay.
foreign party. So all those classification we can handle here, or
Yeah, yes, we can write it here. That's
okay.
what. If we want to generate the tags based on the party type, so which we can do it here. So what we will do is that, so we will firstly create this party classification and then attach it here. Okay.
Mhm.
And once this activity is done, so then probably we can open the supplier and add this physical classification to the supplier, then create the respective tax rules, and if this supplier is selected, then tax is going to generate. So that's the setup that we'll have to do.
Okay.
Okay, so so probably I'll just create the tax rules and I'll show how this needs to be created. Okay, so but in terms of options, if you see, so it's the same thing what we have seen in the product. So we have option to create this classification code, and this classification code must be attached to the supplier. Okay, so once it is attached, and then we can proceed with creating the tax rules. Okay. So similarly, we have it for the transaction as well. So I'll just show the transaction part as well. Okay, so similarly, you'll have the code which you can give, and you can attach the regime. Okay, and if you come down, these are the classification codes that you can use. Okay, so once this is done, so that's what. So you can decide either we wanted to create it at the transaction level, or the party level, or the product level. So based on which we can define how we wanted to basically write the tax rules.
Is it like some cases it is the combination of both?
Combination of both, meaning.
Because, for example, some scenarios, what happened?
Okay.
There is a customer.
Okay.
Okay, like for example, I think in India,
Okay.
military.
Okay.
Now he's a customer, but our product is basically like taxable product.
Okay.
Now, if we sell a car to normal customer,
Okay.
product classification is like taxable. So if you sell to normal customer who is a VAT registered, it is taxable. But
Okay.
again, same product which is a taxable product, we are selling to Indian military, then
Okay.
it is a, like a zero tax.
Okay.
So product is same, product classification is same, but this case because of the party is different, it is changing.
Okay.
Same like even if it is like a same VAT group, right? In this
Okay.
Dubai and all, like two
Okay.
companies, sister concern. Okay, different
Okay.
business, sister concern. Maybe they got a same VAT registration number.
Okay.
Then it has to be like a out of scope. Like product is taxable if you sell to other customer, but if you sell to this sister concern, it is like a zero rate.
Okay.
So that's where this party, I think combination fiscal is a combination. I don't think like we can do it like individual. So
Yeah, so in that case, probably we'll have to select two conditions. So one would be the party specific, and the other one would be the transaction specific. So as I said, both the conditions we'll have to attach it. Okay.
I mean
So now
party,
let.
product and transaction, right?
Yeah, correct. Yeah, correct. Party, product, and transaction. So in this case, party and product probably we can handle it at the setup level. So only the transaction code user will have to select when creating the invoice, I mean AP invoice or air invoice. So at the time of transaction, this code, if this code is selected and the respective uh, product and the what do you call it, the party is selected, then that should be able to generate. But if any one of the attribute is missed out, then in that case stats will not generate.
Okay. Okay.
Okay. Yeah. Okay. So this is what I was referring to. Okay. So go to, so configuration owner tax options. Okay. So this basically determines how we wanted to generate the taxes. So I'll just say create, and here first thing is that I'll have to give the owner. So in this case it is Vision Operations.
Owner for this particular country only is like
Yeah. So in this case it's not specific to the country, it is specific to the entity. So inside this country, if I have two entities, then I'll have to do two configurations.
Aha, two entities, time configuration order. Okay.
Yeah, correct. Okay. And then I'll have to select the event class. So event class would be the standard invoice. So similarly, we can define it for the receivable invoice as well. So firstly to define, so I'm just giving this as standard invoice. Okay, date is 23. Yeah, so this is just for the rounding. Okay, so rounding meaning we have given it while creating the invoice, right? Sorry,
Mm.
while creating the tax regime. So that's the same option. So this is just the sequence that or the priority that we can set it up. So at what level we wanted to round. So this is based on the ship from, this is based on the bill from that we can define. Okay, so I'll just say this is bill from, and this is bill from 47. And optionally we can set it up at line level also. So I'm just saying header level rounding. Okay, and then we have option to determine
Now, India, we set it in header level. Normally, what's recommended?
yeah, it is header level basically,
Okay.
because line level if we do it, so there will be multiple precision differences in certain cases. So
Mhm.
ideally we will do it at the header level rounding.
Okay.
And then we have option called regime determination. Okay, so this is what I was saying. So there are two ways that we can handle this. So one is, if you see, so if I am creating this with applicable, so when I'm creating the tax, so I have option to say this tax is applicable. So if I have enabled it there, so I don't need to give here determine applicable regimes. So instead,
Oh,
I can give the standard. So STCC is nothing but the standard. So which means I'm going to use the tax classification code. But if I'm going to write tax rules for the applicability, meaning at what scenario tax must be applicable and what scenario tax will not be applicable, so that I can determine. Okay. So now if
mm.
I want to write rule for that, I will have to use this option. But if I have already given it as applicable, I don't need to write it again. Okay. So I can go at selecting this option, but we will be writing the applicability rule also. So I'm selecting this option. Okay, and then these are for the imported thing. So this is not needed, but I have just enabled. So these are basically for the imported documents. Okay,
Okay.
and then these are for the reference document, which means that related documents. So let's say I am creating what do you call the prepayment invoice or this thing. So how do we want to do it? So whether we wanted to enforce the tax, or we wanted to allow this reference document to be attached to it. So those are these enforcing options. Okay. And then this checkbox we will enable because we wanted to use or we wanted to configure the RCM invoice also. Okay. So
Okay.
I'll allow, because if I disable this option, I'll not be able to generate the RCM invoices. Okay. And offset is nothing but the RCM invoices. Okay. So RCM, at what level I wanted to generate it. So I am basically trying to do this for the supplier invoice. So since it is supplier invoices, so I'm saying this is bill from party. Okay. And then this is
Supplier
nothing but
invoice. I mean, even for sales, this
a
setting is applicable.
purchase, a purchase invoices.
Okay. So I'm saying now
Because
we are just configuring for purchase. Okay.
yeah, correct. Because we have selected the application as payable.
Yes.
So I
Okay.
have selected this for the purchasing.
Bill from party. Okay.
Yeah. And then this is again the overriding options that I can do it. Okay.
Mm.
And then the rest are whatever we have seen, the tax applicability, then the manual tax and the recalculation of taxes, then the overriding of the taxes. So these are the options.
Yeah.
Okay.
So one doubt, like if there is like ship from party is different, bill from party is different.
Okay.
I mean, when I say different country,
Okay.
then like if you want to give the tax rate determination based on ship from party, for example, there are some scenarios.
Okay.
Uh, for example, like maybe within Dubai, like one company is, I mean, vendor is Dubai, customer is Dubai. Okay,
Okay.
they may be creating an invoice. I mean, they may be asking some vendor supply and all. So they may be
Okay.
supplying the goods, but
Okay.
actually, the goods may not be coming to Dubai specifically. Maybe
Okay.
it's coming from India to China for
Okay.
some manufacturing. So in
Okay.
that case, like it's the place of supply is something like outside UAE, then they
Okay.
are not supposed to take input. I mean, it's more like a zero transaction.
Okay.
Even though
Zero rate.
so to handle this scenario, like then the offset tax basis will be more like ship to. I mean, ship from. Sorry.
Okay. I mean, ship from meaning we are basically validating based on the seller's location, right? But in this case, so if I wanted to capture this scenario, so if I can write a rule saying uh, I can write rule saying, so if bill from is different from ship to location, then generate the zero tax or the imported tax with 0%. So that we can do it, still we can do it at the tax rules, right? So at
Okay.
this level, we are setting this only for the purpose of rounding.
Okay.
So
Okay.
this rounding, whether I wanted to control at my level, whether it is bill. So bill from meaning uh, my billing location. So this is handled at my location. So if I want to change it to ship to, I can do it. But ship from is a scenario wherein we will have the instead of payable, we will have the receivables. Because
Okay.
that is when we are selling the item, we will do the shipping. So from where I'm selling this item, I can do this rounding. But in case of payables, it is basically the bill from is the source for us to do the rounding.
Okay.
Okay. Yeah. Okay. So we have defined the quota. So I'll just say apply. So similarly, I'll create it for the receivables. Okay, just we can. Okay, so these are the same options that we are setting up. Okay. So only change is that I have selected the event class as invoice that is related to the receivables, and rounding I have given it based on the ship from party and ship from party side.
Okay.
So I'll just say complete. Okay, then the application tax options, just say create. So here I can do it for both the payables and receivables. Okay, so first we'll just set it up for payables and the unit is vision operations. Okay, so this I can set it up as invoice header. Okay, so I'm just saying this, and rounding options I'm not giving here because tax precision and the tax currency, all those things we have set it up at the tax regime level itself. So I'm not again giving it here. And in terms of rounding rule, also we have given it previously at the tax rate and the tax rules level. So this
Okay.
also I'm avoiding it. Okay, so I'll just say,
This one now doubt, like actually I'm not taking any notes, so I'm saying this recording will be available, right?
yeah, recording will be available.
Okay, thank you.
So once this session is completed, you'll find the recording in the same chat.
Okay, thank you.
Okay, I think already this configuration is there because we are taking the existing operating unit. So it is already there, I think. Okay, yeah, so this is 10, and then the next thing is
Service provider means like the service vendors, or you're saying?
no, service provider is a scenario wherein we will have, okay, I think I don't have access. Yeah,
Like,
so for this, basically we'll have integration, so something called
ah,
vertex.
okay, tax
Provides,
softwares additional.
yeah, yeah.
Ah,
The integration between the government portal and ERP systems. So that
okay.
if we want to configure, so we can set it
So
up.
you mean like in Saudi, like they have this invoicing.
Yeah,
It's like then
yeah,
you configure here and you connect.
yeah, yeah. So Zatka is one provider. I mean, Zatka is the actual portal name, I think.
Yeah,
And
it's a portal name, government company
yeah,
name. Yeah, tax authority.
yeah, Zatka is one portal, and apart from that, there are few partners who provides this service. So if at all we don't wanted to basically directly integrate with Zatka. So if we are directly integrating with Zatka, then you don't need this option basically. Because this
Uh-huh.
option I can say,
Third
let's
party,
say,
only
yeah,
third party
third
software.
party. In
Okay.
India scenario, if you take, we cannot directly integrate with government portal, GST portal, we cannot directly integrate. So either we will have to take the clear tax or probably some other third party tool, which even the
Okay.
TCS service provider. So
Hmm.
you'll have to opt the service, and then our file will basically go through this clear tax validations. So once this is cleared, then it is going to hit the GST portal, and from there we are going to get the response or the feed. So if that is the scenario, we can use it. But if we are directly integrating with Zatka, this option is not needed.
Okay.
Okay. Yeah. So the next thing is the tax rules. Okay. So to write tax rules, primarily we will need the determining factor set and the tax condition set. Okay. So these are the two primary configurations that we will have to do. So once this is done, so then we can create the tax rules. So tax
Okay.
rules, we have different options. So we can create the tax applicability rule, we can create the tax rules, we can create direct rules. All those options are there. So probably once we complete this, I'll take you to that option as well.
Okay. And also, like now, for example, like I think there's like a template file, right, where you can upload this into these values. I mean, whatever is given. Like, for example, India lookup codes is ready for Oracle system. The Oracle
Here
support
for
note or
India,
something. They'll. Mm.
yeah. So for India scenario, we have a separate forms, something like this. We have separate form called
Okay.
GST India. So wherein
So,
we have forms like this. So if we
okay.
have this form, we can use data loader to upload the data and we can do that. But when it comes to the EB tax, we do not have an option to upload because this form system will not pick it up. So I think
Okay.
data form is there, but I'm not sure how effective that is. I mean, option
Okay.
is there, but that's not widely used because the reason being we have some issues there. So
Okay.
if it stops in mid, we will have to go back and check the entire configurations, and the
Okay.
forms are not supported widely for this case, the web option inside. If it is
Okay.
Java form, something like this, yes, we can use the data loader.
Okay.
Okay. Okay, so I'll just say create new.
So can I put in chat the values
Yeah, sure.
like the determining factor class values I mentioned in chat, and
Okay.
should be there right already in system predefined? No,
Sorry.
it's not like predefined in system all those values.
Yeah, these values will be there. One minute, let me check. Let me just put this here.
The classifier only is ship to party till ship to party. The class qualifier.
Okay.
Can you please come below? Yeah, class qualifier still ship to party. No,
Okay.
below is the determine factor name.
So these are basically the parameters are the options that we can select. So what makes our rule is that whatever the value that we are given, for example, if we take the geography, so geography, I can define it at bill from or bill to. So when we say bill to, it is the receivable invoice which system is going to refer, and when we say bill from, it is the payable invoice that system is going to refer. Okay. So geography meaning in our case it is the country. So if
Okay.
it is within GCC, so
Mhm.
we wanted to determine one tax rate, and if it is outside GCC, so if we wanted to capture some other tax rates, so we
Okay.
can say geography and bill from. So this bill from value would be, let's say it's equivalent to determining factor set or not equivalent to determining factor set. So this we can define it when we create the tax condition set. So now we will use this tax determining factor set and tax condition set, and we will create the tax rules. So basically this tax rule engine runs in background and it validates the transaction and it will basically generate the taxes for us. Okay, but these parameters, if you see, so these are predefined in the system. So meaning the level one is nothing but the product non-inventory. So this is what. So this
Okay, so
line
these are
is
like
based.
predefined already. So these are
Yeah,
everything is predefined in system. So
yeah,
we
yeah,
don't have to create lookup values. And now this values we will assign in the tax rules, right?
yeah. Correct,
Okay.
correct. That's what I was saying. So if you take this product non-inventory link, so if you have
In
the five,
service.
yeah, correct. So you can, so if we have defined this product non-inventory linked category at level 2, so then we can go for level 2 and we can attach that category code and write the tax rules.
Okay.
Okay. So similarly, these things, if you just see,
So
you'll
level two,
be,
what do we I mean, in the transaction, how does system know this is level two? Like,
so level 2 meaning, so let's say I am saying, so level 2 is let's say exempted. So just for example I'm giving, okay, so I'm saying exempted, and here what I am writing is that, so I'm saying this is product non-inventory linked category, and at level 2 it is exempted. So now when I create the invoice, so we have something called product category. Okay, so in the product category, so if I'm selecting the category as exempted, so then system is going to generate this stats
okay.
that exempted.
Okay. Fine. So this then it will be huge combinations, right? We need to
Yeah,
maintain.
correct.
Okay.
Okay,
Okay. So again, like then you define like the top level is like party, then again
yeah.
the next level is product, or like product is the top
Yeah.
level, or how is it like?
No, that
Sequence will
is
be.
just the sequential that we can give, so that is not going to impact. So it's
Okay.
about the combination if we are giving it, so that combination should be present while we are creating the invoice. So that's the thing.
Mhm.
But it is not going to check sequentially. It is going to check just if this combinations are present in the transaction.
Okay. And like what is the difference between document and transactional transaction?
Yeah, so document you will find certain things, and geography is specific to the country. So I'll just select the document here. I think there are no documents created. So let me go to preferring factor set first. Yeah, I think this is the only document that has been created actually. So
And
probably
for
if you,
documents, only document subtype.
yeah, so only the application is mapped to this, but then it's
Mhm.
only the document type that we are capturing. So meaning if it is invoice or debit memo, credit memo, so we are just capturing that as an information.
Okay. But you don't have to assign it, right? Not mandatory. We can go for like transaction,
Yeah, that
party,
is
and
not,
product combination. Yeah.
yeah, that's not mandatory. Okay, so let me give a name, just give it as VAT standard. So this is mission operations. Okay, and the regime that we created is by, and here first thing I'm saying is product non-inventory linked. Okay, the level I'm saying is 2, and determining factor name is product category. Okay, so this is first line that I can set, and then the second line I'm setting it as, let's say, geography. So based on the location also, if I want to get it, so in this case I don't think I'll have qualifier, sorry, will from. So I'll select bill from. So here in this case we selected there the country. Okay, so I'm selecting this specific to the country. I mean, number of lines we can add it. For time being, I'm selecting this as geography and non-linked inventory. Okay. So meaning if this category is matched and this country is matched with the determining factor set, then generate this stats or give the stats rate is what we are trying to write as a rule. Okay. So just say apply, and the next one is to have the tax condition set created. So again that standard. Okay, so this is the one that we created, and country is UAE.
So within one condition set, we'll create many factor set.
Within one, no, we cannot create. We'll have to create it as a separate one. In one
For
condition
example,
set, we
like
can attach only one factor set.
okay.
Okay, so here I will have to specify. So here in the operator, so I will have to say this is, if this is not equal to, which means that if this is, let's say, other than this country, so bill from is from Dubai, let's say Dubai or Abu Dhabi. So if this is from Abu Dhabi and this is not equivalent to this address, which means that ship to, so here in the value, so I can give this as ship to. Okay, so if bill to and ship to country are not same, so then I can say that the tax rate would be the 0 or the higher rate or the exempted rate, whatever the rate that I want to give, so that I can define it. So that I can give it as not equivalent to determining factor set. So this is one condition, and the second condition is product category. So product category, so I'll just select it from the list. Okay, for now I'll just take the default one, 000, sorry, triple zero and 000, and I'll say finish. Okay, so the next thing is to create the tax rules. So we'll have to write one for the applicability rule and the other one for the tax rate rule. Okay, so firstly to create this, I'll give the owner. Okay, so here I'll have to first write it for this one, the tax applicability rule, because we did not enable the application. Okay, so for this I'll have to go to so I will first give the rule code. So rule code, I'm just giving the same one, VAT standard. So this should be 2023. Okay, and then here we'll have to select the one that we created there, that is VAT standard. So this is the one that we created. Okay, so we can verify with these details. Okay, so this is the one that we created. So I'll just say next, and then here I'll have to specify the condition set that we created. So even the condition set we gave the standard name, I mean the same name. So I'll select this VAT standard, and here in the result column I will have to specifically say this is applicable. So because firstly system is going to check whether this tax is applicable, this condition is applicable or not. So if we say not applicable for this condition, so whenever the fiscal classification code this 000 is selected, and this country is not equivalent to the bill from location, so then by default tax will not be generated for this particular case. So I'm just saying applicable, meaning if this condition is matched, then it's eligible for taxation. So that's the rule that we are writing here. Okay,
Okay.
so I'll just say next. So rule order, I'm not sure it's the existing rule order. Let me see. If not, okay, it got saved. Okay, so this we have written. So that is tax applicability rule that we have written. So which we can see here. Okay, and then tax rate rule. So to determine the tax rate rule, we can say determine tax rule, and we can write the rule here. So I'm just giving the same name for this one also. Okay, so I'm selecting the same condition set, sorry, the factor set. So if I click next, I'll have to give the same condition set, but the result will be different in this case. Right, STD. Okay, and the result column, I'll have to specify the rate. Not sure why rate is not appearing.
No doubt, like for example, like now for this sales related and purchase related, you
Okay,
may be able to like define this rule set based on like transaction party and product, right?
right.
And now when it comes to Oracle's receivables or
Okay.
Oracle's payables, then this rule set still apply
Yeah, yes, it will still apply. So
because like
still
those
will,
cases product may not be there, right? Now this is like product related. Now Oracle receivable, maybe you don't mention there is a product, but can you select this? I don't know the screen. So in the account receivables, you can select this classes like product non-inventory, then the automatically tax code will show up.
okay. Yeah.
Is that
So
it is okay?
So this page or this rule that we are writing is basically to determine the taxes. So what will be the tax rate that system should apply, but that is not specific to the product or non-product linked inventory items. So even if I have product, I'll have to write. Even if I don't have non-inventory linked, I'll have to. Meaning, if I have geography and I have, let's say, uh, party specific. So I will have to still specify if this is the geography, meaning not equal to factor set. And on the first line, I might have, if this is the party physical classification, then generate this tax rate. So still I'll have to write this rule because this is what going to determine whether the tax rate which we are going to generate at the invoice.
Okay.
You're getting it or still you have?
Yeah, I understood. Like the determination combination, I understood. Yeah. So maybe
Okay.
like when I see the screen where this is determining, like
Okay.
maybe.
Okay.
So, but still, I think I we need to create many combinations, right? All the scenarios.
Yeah, correct.
Okay.
I think the tax rate did not get saved properly.
So,
Yeah, maybe the earlier one which we created that did not get saved properly, I think.
Uh-huh.
Now it is coming.
You click apply, then it should save, right? Normally, no other save button, right?
Yeah, apply only, but that did not get saved properly, I think. I'm not
Okay.
sure why, but it did not get saved properly. So earlier, if you see, so we did not get the rate there in the result column. So now we are getting it. So after defining it.
Okay.
Okay, so I'll just check if the tax and the tax rates are uh, allowed.
Yeah. Stay.
Okay, so I've enabled this for the transaction. Default tax status. Okay. I think we are given the default. Yeah, given it. Okay, I think I did not give default. I think I did not give the default one. I thought I have given both the columns, but then it's only one, I think. That's it. Okay, so now probably it should get saved. Define over default status. What's it asking for this?
So you maintain the tax registration number here, or
Sorry.
the part that entity wise tax registration number you maintain part.
Which one? Sorry, I couldn't follow
Okay,
exactly.
I'm not here. I mean, not here. I'm just asking, like, for example, the company, they have like five companies in Dubai.
Okay.
Each company VAT registration number is different. So, would you we maintain that here somewhere?
So here what we are trying to say is that so we are making it one as default, and the rest if we want to probably make it based on the transaction. So for that we'll have to write rules separately. So for example, if it is based on the registration, so for that we'll have to write separate tax registration rule. But this we are setting up only for the purpose of defaultation.
Okay.
Default status of tax. So, okay, so now I think it should allow us to. That's registration. Default one. So I entered already. Okay, without management. 100%. Okay, I think this must be enabled for default, but somehow, somewhere we missed to enable the default option, I think. So that's why it is asking to complete the determining tax registration and all those things. So probably the remaining ones will continue tomorrow.
Okay.
Fine.
Tomorrow, sorry, like coming like evening is fine. Like I mean night, like 9 o'clock or what is the time?
Yeah, sure, fine. You let
Something
me
like
know the time in the
so
chat. So,
9 is fine. Like
okay, fine.
9 to 10. I don't know what's the office timing. So 9 to 10. Tomorrow's leave for you. Okay, but I mean weekend, right? So if you're available 9 to 10, we can do. Or like if you prefer like from Monday, 9 to 10, we can do. No problem.
Yeah, sure. We can do it by 9 o'clock.
Yeah. So I'm saying tomorrow you're available.
Yeah, yes.
Okay. Thank you.
Yeah, thank you.
Okay. Thank you. Bye.